Hey everyone, welcome to another edition of our Smart Investing weekly stock analysis, where we break down popular companies that may be in the news or maybe that are just popular, quite frankly. And this week we're going to take a look at Dollar General. No, not Dollar General, excuse me, Dollar Tree. There's two dollar stores. I got them confused. And very important, if you like this video, be sure to subscribe to our channel below because, again, it's the weekly stock analysis. We'll be taking a look at different companies on that weekly basis. With that said, let's get into Dollar Tree. Kind of an interesting week for these two companies, but we're really singling out Dollar Tree in this case.
And Chase, I gotta. Oh, well, go ahead.
I was just going to say, I mean, it's interesting because the stocks, they've done so well, but this last week, I mean, Dollar Tree in particular had a day, I think it was either Wednesday or yesterday, they were down 9% after reporting earnings.
Yeah, what I was gonna say. Have you ever been in these dollar stores, Chase?
I've been to the 99-cent store. I know it's neither one of those companies, but that's the only one I've been to.
Yeah, about a year ago, my fiance Christina, she introduced me to them, and it was like so exciting. I mean, I filled in my basket, and I walk out of that store paying like I think $60. I go, this is crazy. Look at all this stuff I got. These stores just amaze me on the amount of stuff you can get, and not junk. It's some pretty good stuff sometimes. It just I love these stores. We've not looked at the numbers yet. I'm hoping this is going to be a buy because I love these stores. They're such a value play, is what they are.
How much of that stuff you bought over a year ago do you still use to this day, though?
Can we move on?
Well,
I think there's some things, but it was like things that were usable. Like, all right, here's a good example: greeting cards. Greeting cards that cost $2 to $4. You get them there for $1.
Yeah.
Use them up. Yeah. So spatulas, all these other things. It's just amazing. You got to kind of keep me out of there because I got kind of go crazy because the stuff you get there. That's why these companies are doing so well. So I'm excited to look at these numbers.
Well, before we get into that, I did want to talk kind of what happened in the quarter and what's going on with this business. And no surprise here, we know there's a lot of issues with transportation costs. Well, Dollar Tree came out and they actually said their freight costs for fiscal year 2021 are now expected to be $1.50 to $1.60 per diluted share, higher than fiscal year 2020. So you're seeing a huge ramp up in this. And even on a shorter term basis, this just blew our mind. The company expects an additional 60 to 65 cents per diluted share, or $185 million to $200 million in freight costs just since the first quarter guidance in May. I mean, the freight costs have just skyrocketed for the business. You might be saying, well, how did that happen? They actually use a lot of different ocean carriers to get the products over here. And they do use China, it seems like, as a major supplier for them. But at the beginning of the year, in the first quarter, they estimated that the ocean carriers would fulfill about 85% of their contractual agreements or commitments. Now that's been lowered to between 60 and 65%. So a huge change in the supply chain, which is having a major impact, I think, on how they're running the business. And selling things for $1 is going to make things a little bit harder on that margin basis.
Yeah, it really is. And unfortunately, we do see, obviously, people pull to the pump, they see that they're paying more at the gas station. Well, again, ocean liner, the same thing. Also, too, I'm sure their labor costs, which include the freight costs, because you have to people load and unloading the boats and everything else. And I do remember up in LA that I think they're called onshoremen or longshoremen, I think they're called. Some of those guys are making well over 100 grand a year. They could be making maybe close to 200 grand now because of labor costs. So I don't know, but yeah, it is going to affect companies. So we'll have to see if they can still keep to that dollar per item.
Yeah. Well, I was going to say that's the thing that does kind of concern me a little bit. And we know this crunch in terms of transportation, it's a fixable problem. Hopefully we're not in this situation for the next decades to come. It should be resolved. But the thing that's always worried me about these dollar stores is most of the time what happens is, okay, your input costs go up. Well, what do? You increase your prices. If you're a dollar store, aren't you kind of locked in to being a dollar store? How do you combat that?
I'll give you a secret how they combat it. What they can do is that, say, in that dollar store, you normally get 5 items for $1 in a packet. What they can do is, instead of 5, use 4 items to increase their profit margin. So they're pretty smart and stuff like that. And also, too, they'll push their supply a little bit more. They might push a supplier. They might also say, okay, let's take a little hit in the margins, which would not be good for the business. But there's some things they can do to keep that dollar. It's going to be very important. So I'm not going in there. More than dollar one, I'm not going in. I'm done.
Well, because I was going to say, I mean, these companies, they worry me during rising inflation type environments. I wonder if that's going to be problematic. They're great defensive plays if you're hitting, recessions, because as you said, people are kind of going around. They're like, gosh, I can't afford much. So I'm going to the dollar store. And that way you can get better deals and stuff. So they're great during difficult time periods, but I just wonder how they're going to be during an inflationary period, which we believe we'll see. And you're right. Maybe there are ways that they can combat that. Be very interested to see how they go about doing so.
Chase, keep in mind also too that some of these products come from other stores where the item wasn't moving. So therefore, to get rid of it, they went to the Dollar Trees and so forth. Well, they might say now, instead of giving you, 80 cents for that product, we're only going to give you 75 cents. So the person selling it, that other retailer, that main name retailer selling it, they may not get as much for it. So that's how the Dollar Trees can keep their dollar thing by giving more or less actually for the retailer selling to them.
They must be great negotiators. I think you got to be to run those stores.
Well, and I think many times the retailers have a choice either take that or throw it out and write it off. So
Yeah,
keeps their cash flow for these other big retailers very important for them.
absolutely. Well, with that said, I think we talked a lot about the concept of investing in the store. Let's take a look, as always, at the numbers, because when it comes to investing at our firm, the fundamentals, the numbers, that's what's really going to ultimately drive our decision making if this is a good company and a worthwhile investment at the end of the day.
I'm excited, but I'm so afraid I'm going to be disappointed, but I hope that's not the case. So let's look at the numbers here for Dollar Tree Incorporated, symbol DLTR. Wow, what a great start. I see the PE ratio, 14.7, well below the industry at 60.7. That's a good start. Wow. Look at price of sales, 0.8 versus 3.3. That's another positive. Price to book value, 11.3 versus 17.6. And even your price of cash flow, which we talked about, 9.9 versus 27.5. So great start here. The valuation ratios are saying this company so far is worth looking at because they're not overpriced like unfortunately some other retailers are. They do not pay a dividend. We do see sales growth. Well, unfortunately, only up 4.6%, well below the industry at 30.6. But we got to point out too, a lot of those industries have such high growth because of last year. It was so low on their sales. Dollar Tree, these other dollar stores, I don't believe they went through that big decline. So that could be why we're not seeing the big increase in sales. Now we look at the earnings, similar story there, but gosh, you got to be happy with your earnings growing year over year for the last 12 months by 69.9%. Yes, the industry up 253, but again, very, very low comparison because these are earnings per share year over year for the last 12 months. Let's look at that important number here, which is the current ratio. Let's take a look at the balance sheet. How strong is this company? Very strong on the liquidity side, 1.25, almost the same as the industry at 1.24. And wow, look at this number here. Total debt to equity, 46, below the industry of 68. So they're not overwhelmed in debt. If they do hit a slow time, they don't have to worry about paying a lot in interest charges to pay that debt off. So I like seeing that. Return on equity, very respectable at 21.6. The industry at 26.9, slightly higher, but again, I think it's probably because of the big change from last year being so poorly down. Look at the profit margin. Wow, they're doing well here, Chase. 5.78. That is above the industry average at 5.5. So they may only charge $1 for their products, but they're making a nice profit margin there. We don't see a receivable turnover because everything is cash with them. I don't think they have any receivable turnover. Inventory turnover is a surprise for me, 5.1 versus 8.1. Could be just a type of the product because it's such a product that maybe it doesn't change over as much. I thought that would be higher because of dollar product, but I guess I was wrong on that one. But I'm okay with a 5 times turnover for the last 12 months.
Yeah, I was kind of taken back by that as well. I thought it would be a much higher turnover. And one thing to point out, the receivables. I am curious if they do accept credit cards and they might just not carry those receivables. So something to understand if you are looking at buying this company. Now let's look at the numbers here, and these prices are as of yesterday's close. Current price here, $93.48 for Dollar Tree. The 52-week high, well, that's $120.37, and the 52-week low, Well, $84.41. I did pull up here just real quick the current price. Another down day is it's now $90.89. So, I mean, I haven't gone over these numbers yet on the target sell price, but you could be catching something that if it continues to fall, it might work itself into that buy category. I say that. Let's take a look at the target sell price. I go out to January 2023. You see estimated earnings per share here of $6.44. Well, I use our 16.6 multiple on that. I get a target sell price of $106.90. That's an estimated gain of about 19%. Now, we like a margin of safety of 30% before we buy something. It's kind of what I was talking about there. I did kind of cheat. I looked at the target sell price before we got into it. So I knew it wasn't quite a buy yet. And if that current price does continue to fall, hey, maybe this thing can become a good value. But I think there's some questions to answer. I think that there's a lot of strong fundamentals. But again, I'd be patient with it.
Yeah, and did you use with target sell price today's price or the 93.48 that's on the screen?
The 18% is based off of a $90 stock price.
So you did use a better number. And
Yeah.
and I was so excited. I mean, this is so close. I can kind of taste it that this could be a good investment. But we got to warn investors also too. You got to be careful here because what could happen is those analyst estimates could come down, lowering our target sell price and not having that margin of safety of 30%. But gosh, I would love to buy this business. It's a great business, and I'll go in the Dollar Tree store even more if we buy this company.
Well, that is a great point you just brought up too, is the report just happened this week. Is it could take some time for analysts to actually filter on through their new numbers for estimates for next year, which could be problematic if that target sell price comes down even more. So I think, as I said, interesting perhaps watch item for Dollar Tree. You shop the stores, yeah, hey, you can get some great deals at the store. Not quite the deal I was hoping for on Dollar Tree today, though.
And also, too, Chase, we got to remember next week is September. They are on a fiscal year. So in another few months, not that far away, we're going to be able to look out one more year. We could maybe even push that if we get a little bit closer to maybe even say, hey, this company could do better. And I forget the numbers there if you still have them. Yeah, there you go. Because we were looking at what, January of 2023. Is that what you looked at?
Yeah.
Yeah, we could kind of fudge the numbers a little bit to kind of maybe go out to 2024. Based on the number of analysts that are actually covering that company. Oh, yeah, big drop there from 25 to 10. So maybe as the months go on, we get closer, maybe we'll get more analysts looking at that to give us a better number. But
and I will say, the thing that just blows me away with these companies is, again, 2020, they made $4.76. Last year, they made $5.65. This year, they're looking at kind of plateauing a little bit, again, making $5.65, but then next year, $6.44. I mean, it just blows me away that these companies are able to sell products at such a minimal price, but then continue to increase their earnings per share over time. I mean, it's a very interesting business model. I don't understand enough about it because I've not owned a Dollar Tree before, but it's intriguing. I like companies that make money, and they seem to know what they're doing when it comes to making money.
And I think on the YouTube channel, people can give us comments. I'd be kind of curious how many people actually go to these dollar stores. You invest in the company, how many people go? Let us know how many of you go to the dollar stores. And
Exactly.
if you're not, you're missing something.
I haven't been in a while. I might have to go check one out here soon.
Bring your cash.
Yeah, I got to go get some cash too. Well, anyways, I just want to thank everyone for joining us today. If you like the content, again, please be sure to subscribe to our YouTube channel for upcoming stock videos. This should not be used as investment advice, as it is for informational purposes only. If you are interested in learning more about our investment philosophy, learning more about fundamental analysis and how we manage money for our clients, visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com.